All right. How's everybody doing? VonTheBuilder here. What I'm gonna do real quick is just go over a little chart markup situation. Some folks been asking me to, mark charts up and kind of show what I see in the market. So let's hop into this. Get right to it. Okay. I'm gonna find a chart that I don't really have marked up all the way. Let me go through some of these markups that I already have. See what I want to do. Market is closed, so just gonna be doing a little markup real quick. Now, most of these things you see here, I draw these lines out prior to the market moving, just to kind of give myself a glimpse of what I'm predicting. This is something that I actually drew out. Today is Thursday. I drew this out this morning, and this is crazy to see this actually form the pattern that I actually drew. And I do have photos to prove that I drew this out prior to. And just basically, this is just the market moving in waves, going from zone to zone, going down in a downtrend format. Okay. But let's go to a pair that I can actually mark up for you guys and show you, what I see. I'm going to find a trending pair. Okay, I like this. Okay. Here's a trending pair here that I want to show to kind of show, the steps and the zones. Okay. So what I'll do, I'll erase these items here. And again, marking up a chart from scratch, I would definitely start on the daily, work down to the 4 hour, work down to the hour, down to the 30, the 15, and the 5. Okay. But and normally you can do that with horizontal lines. But the way that I'm doing this, I'm just going to use zones. So therefore, I won't be going all the way back to the daily to draw zones. Okay. I'm going to start with the current market here. Okay. And kind of leave these here because those are pretty much already in place. There's no need to show you that part. I can show you what I would see here. So basically, I would go down to the 30-minute chart, expand it out a little bit, and kind of look for my zones. All right, so then I will use a rectangle. Move that out of my way. And I have this toolbar here, basically from the right side. Anything you want to add to your favorite toolbar, you kind of come to the side, expand it out, and you just push the star, and I will put it down place on your toolbar. Okay, so I'm going to use a rectangle, and I'm just going to start drawing my zones. Basically, my zones are where the market kind of reverses and goes into a different direction. So when I see wicks, that's resistance, right? So I'll start my zone there. So right up in here, I see a nice zone, a resistance level here. I will go from the body of the candle and bring it up to the wick. Just like so. Then I would expand that one out. And I'll just keep going up. Same thing right here. And I'm going to expand it out. So you can see the resistance in the area, and then it's down here touching the line and bounce right back off. Then I'm going to go up and draw me another one. So right up in here, right? And then you can see here, I'm going to trap this consolidation period here. Put the market in the headlock. So right up in there, it respected that area. And then it finally broke out. Okay. So now what I'll do, I'll expand them these left and right. After I expand them to the right, I can use this for future, right? Let me just move this out of my way to show you that. So down at the bottom, you can see the time frame that I can use this for. So I'm just going to expand it out. That way I can use this for, days to come, and just keep using this until I can't use it anymore. So that I'm going to try to get too crowded. I like zones too because I can see the market better. A bunch of horizontal lines looks like a bunch of lines after a while, and you have to clear your charts. With the zones, I don't necessarily have to clear it out so much because I can kind of see through the zones with a transparent color, so it helps me see the wicks and the bodies of the candles a little bit better, in my personal opinion. Okay, I'm just moving those out to the right. And these are going to form new highs every time the market moves up, or new lows as the market moves down. Okay, you can kind of see that it's in the right areas. Sometimes when you're moving, you gotta make an adjustment, but everything still looks proper. Copacetic, the way I like it. Then I'll come back to the left, and now I can drag it over to see if it's gonna touch anything over here. Now you can see this one definitely touches the wicks here. All right, drag them on over. Then I can go to a higher time frame and then see if there's any other candles that it may touch. I'm gonna go back and check and see, make sure it didn't move. Okay, so I gotta make an adjustment. All right, everything still look copacetic. Okay, then I can draw one up top. Put the marker in the sandwich hole. Or in a headlock, as I say, right? Okay, so now I'm chopping my market. Drag it out. Okay, that's good. Now I'll go back to the left. Drag it out. And also what I want to do now is just kind of check on a higher time frame to see if anything is over here. As you can see, there's nothing. So I have nothing to really go off of to, make sure that's a resistance level, because the market hasn't been this high in some time. So I'll just stick to what I have based on the resistance levels that I see and use that. Okay. So I'm glad there was nothing there, because that way you guys can know what to do if there's nothing to go off of. So all that you can go off of is what you see in front of you in this current market. Okay. So now I got one here. I'm gonna drag this one over. That way that bottom is trapped, and I'm gonna draw some lines to show you guys what I see here. Okay. All right, now starting from the bottom, I'm gonna use this drawing tool here. So here's the market. The market came up right there, came down. Market came back up, came right there, went back up, came down, market went up, back down. Here we go. See that? And it kept going up. Came all the way up to the zone. Break and retest. Did it quite a few times. Finally, it broke through. I gotta take my chart up now. All right, finally it broke through, right? Broke through, kept coming up, came back down. All right, so there we go. So that's what the market did. So what I see is opportunities, right, on this break and retest. Also, I can use the fit. I'm going to talk first of all about the break and retest, what I see here. So basically, once I have my zones out, right, now I'm just looking for break and retest opportunities. Anytime I see the market come to my next zone level here, right, it touched that area, the next time I know I can take a trade there. And as you can see, you move it over to the left, to the right. Market came up, hit this 065 area, sell that market back down. However, because I'm in an uptrend, I would pretty much feel safer taking calls on this actual pair. However, you can see the red candles in there. That's trading against the trend. What I try to do is predominantly trade with the trend. So again, I will be taking calls or buys on this pair based on the trend action, okay? So if you make it a habit of trading with the trend, you're more likely to clear more trades than you will lose them, okay? All right, so let's keep it simple. So again, as you can see, the market went up, came back down. I drew this over here to the right, that way I want to cover the candles up, but I could have drew this directly on the candle to show you, but it's the same pattern to the right, just not as pretty, and going with the actual candles, okay? So let's keep it going here. So again, market hit here, come down, retest this area, right? I can take a call, buy the market back up, right? Market comes back down to this same area of resistance down here. I can sell it. I'm gonna take a call here, boom, ride it back up. Comes back down, find my level, ride it up. So this is my break and retest all day long, right? From zone to zone. So if you didn't have this line, I'm talking about just working the zones, okay? So that's what I use zones for, to tell me or to show me, identify the break and retest entry points, okay? So now I want to fast forward to using the fib with this, okay? So we know we're in an uptrend format now, right? So the market is going up. So basically, I would find the low, come all the way up to the high, right? Drag it over a little bit. You want to put the fib on the body of the candle, okay? So I ride it up, and you can see, what did the market do here? The market, you can see the double bottom here, make it a little bit bigger. You can see the double bottom, right? Well, actually, that's a doji. The doji here is also identification of reversal pattern. This is a double bottom, okay? But here's your doji, 1, 2, 3 dojis. That's actually identification of reversal. Here's another doji here, another doji. Those are indicators telling you the market's going to do something. Continuation. All right. You got a doji here. Mark come back down. Boom. As soon as it hit my zone, it broke through the zone, right? It broke through all these zones. Boom. Finally, it said, okay, sir, I'm going to come back down, retest this area. I'm going to ride that joker back up, right? So on the fib, it hit my 618 zone right here. That's money all day long. Came down a little bit to the green zone. Again, a second level of resistance where now you can take another entry. Took one here, maybe 2 entries now, riding that joker back up, right? As it goes all the way up, right? Here's my zone where it came from initially. It broke through the zone, touched the zone, buy it back up. All right. Let me give me another pattern here. ABC. So again, the market came from here, rolled up. Market came down. Market went back up. ABC. All right. So break and retest. The market came through the zone, retest, ride it up. Okay. One other thing about ABC is this. When the market does not break structure, it must go the other way. Okay. Here's an example. The market was here at 342. You can see that red candle. The market touched the zone. It did not break the structure, meaning it did not go through there. That means it's going to come back down. Okay. It went back up close to it. It did not break. So anytime the market does not break the structure, it must go the other way. So ABC, meaning that if the market goes to a zone, does not break it, it must go the other way. So I call that ABC. All right. So again, market came down, goes up, doesn't break structure, see you the other way. Right? Very simple. So those are just very simple things you can kind of use to help you see things a little bit more clearly, and what I utilize throughout the day and what I see in the market. All right, let's move on. All right, now here's another opportunity to use the fib up in this area here. So I have my low, right? The market has not left this area. So I can take it from here and ride it up, just like so. As soon as that market comes back down to here, based on this level of resistance, and you can see here, there's a wick right there. So what I would do here is I would draw me a zone, because this is what I want to use, is what I call a money entry, right? So this would be my money trade. And I don't need to make that zone real big, because I'm just using it for this short term frame on the current market. Okay, so right up in there, you can see those wicks. And this is on the 30-minute chart. Now, I did all this on the 30 to show you, but I should be drawing my fib on the 5-minute chart. That's what I trade off of. I just wanted to show you a bigger picture. I'm going to erase these fibs and go back to the 5 and redo that, so that way you can see, okay, how it would look differently. All right, so let me erase my fibs, go back to the 5, and redo my fibs. That way I won't confuse anybody. Okay, draw that down now. So now you can see a whole bunch more candles, right, when you go down to the lower time frame. Okay, let me go back down. All right, there we go. Pick out my fib tool. All right, so there's the higher high. And again, I came all the way down because this was just straight going to the top, to the mountaintop. So this was actually the previous low, and that would be my high. So again, I'm waiting for this to come into my zone, right up in here where I got my alarm set. Boom, it's almost touching that. So as soon as it touches this area here, I would go in for that trade. Even though it may wick down a little bit more, I would be okay with that. So if I took it at 929 and it came to, 915, 920, I'll be okay with that. Or I would just be patient and kind of wait. If you look to the left, you can see these wicks up in here. So actually 902, between 905, 902, that would be like even a better entry. But sometimes you don't get it to come exactly to, the same wicks. Or anywhere up in the vicinity of my zone, I would be okay with taking that trade. Okay. All right. So that's what I see here in the current market. So I hope you guys got some value out of this YouTube video. Okay. Now, I don't want that. All right. So now you can kind of see the trend because I zoomed out and you can clearly see the strong uptrend there. Right. And I have my fib on the current situation that I'll be waiting for come Sunday. So Sunday, I already got this set up to take a trade on this on G-Odd. So I will be looking, let me just put it up here. And I'll get back, let you guys know if I cleared this trade or not. As soon as the market opens up. All right, this would be a call. See what I wanted at. I think I wanted at 902. Let me see, make that a little bit bigger. I don't want it to break the structure, but you can see these wicks, the wicks all come down to 897. So 897, you got to see the wicks here, one here, you got two here. So around 897 would probably be the better entry. But again, if it doesn't come all the way down, see, it already touched 930 and bounced, went the other way. But if it pushes down to the 897 level, that will be money. So I probably would take two entries on this. I probably would take one at the 930 area and a second entry at 897. So that would be my two possible entries. And I would probably take my 930 trade at a lower risk. And then I would take a higher risk trade at 897. That way, if I lose this trade, I'm covering it with the higher entry trade. Hope that makes sense to you guys. So I'm gonna put it here. So this would be, I don't know who that is trying to get into my YouTube right now, my Zoom video. So this would be a call at 930 by risk and money entry at 897, and I'll do a 4-minute call. All right, so that's my note to myself, because come Sunday, I might not be on my money right away and may forget about what I want. All right, so I hope this helps you guys out. Oh, I got something here to erase that. Pretty much what I see. All right. So that will be waiting for me on Sunday. All right. Let's go. And anything else? No, that's pretty much it. Now, one other thing I want to say though, when I drew these zone boxes on the 30, you can see they're pretty big. So I need to bring them down a notch so they won't be as wide on the 5-minute chart. So I would just do something like that. Go back and make sure that it's good, because you can still see through this, but you can see that it's not really on the body. You bring it down a little bit more. Make sure I got it perfect. All right, that's a little bit better. Let me make sure of something. I want to make sure I'm touching this area here. Okay, so it's just about touching the zone. So actually, yeah, 930 would be that entry there. And then coming in a little further, 897, 899. Okay, that's cool. So I don't want to miss the entries. Yeah, 897 would be good. 930 would be good there. Got to really zoom in to see these wicks. All right, let me check the 15. Make sure that's still confirmed. Yep. Okay, so you guys see how it looks on the 15. That large engulfing candle. Check it on the 30. Make sure everything still matches to what I want. 897 and 930. All right, so I'm satisfied with that. And the 30-minute looks so pretty with this, the line that I drew. And to see this happening before your eyes when you draw these out, it's phenomenal. So I would just make it a habit, when you draw your zones and there's nothing there, draw this pattern out. Draw your pattern out of the market forming new highs or new lows if you're going with the trend down. And then you want to draw these lines out. That way you can kind of identify the trend and you'll see it more clearly. And every time that candle hits the line, you're okay, there it is. Because this line, it's almost like a lifeline, right? It's going to show you the heartbeat of the market. So this actually helps me identify entries, and make me feel like a sniper by that precision. But really, marking charts up every single day helped me to get to the level that I am with understanding the market and reading the market, things like that. It didn't come without practice and a lot of sacrifice. And I'm just saying, just every day, put some work into your charts, marking them up, back testing your trades, things like that. And I've actually been trading about 6 months now. So I haven't been trading that long, but I think I'm getting better and better every day because I continue to be a student and I continue to be a sponge and learn from other people who have been there before me that are successful at trading now, like Jake Bloomstram, Andrew Thayer, Dr. Josh Lee, and Brandon Boyd. All those phenomenal people that I look up to in trading. So again, hope you guys got some value out of this, and let's rock.